probably think about it in kind of 3 key tips and tricks for boards to engage with shareholders. 1, lay the groundwork. Really look at the company's proxy statement and its website and make certain you're using it not as a compliance document, but more as a communication tool. The second tip or trick that I would say is to be prepared. Understand who your shareholder is, what their governance policies are, so that you know how they vote in particular to certain topics and interests. And if you're going to meet with them, really have a substantive agenda of topics. And finally, last and most important, I would say listen. The important point of listening and letting the shareholders do most of the talking, and also having an open mind so that you can understand any critiques against the company. Those would be the tips and tricks I would say. We've seen a significant maturity. I think one, it's in the number of direct engagements that boards have with shareholders. We do an annual corporate director survey each year. We have over 900 directors respond, and that gives us really some good benchmark information to use. And the number of boards that now say at least one board member has met with shareholders is up to 42%. So that trend line has really been increasing over the years, and I expect that we'll continue to see that. I think also there's a more positive view of the shareholder engagement by the director audience with regard to the preparedness as well as the dialogue and the impact on proxy voting. And finally, I'd say the investors also are maturing their model. You see it with the growing number of governance departments by the large investors to allow them to have more engagement with their constituents. Certainly the trend line has been going up for the support with shareholder engagement, and I think we see that through the statistics in our annual corporate director survey. I just mentioned 42% of directors have said that they've directly met with a shareholder. Someone on their board has met directly with the shareholder, but not everybody is on board. You know, through our results, 23%, so that's almost a quarter of directors say that the board should not meet with shareholders. I think this trend line has continued to come downward, and I expect that we'll see that gap close even a little bit more. Not everyone is on board today. Well, our annual corporate director survey has a lot of really good information. If I had to pick a couple of key statistics that I think are important or have resonated well with our audience, the first is the one that probably gets the most play. Our results say that 46% of directors who responded, and that's a 900 director pool base, have said that someone on their board should be replaced. That's almost 50%. That's a really, really high number, and the statistics have continued to increase over the last few years. If you look back 4 years ago, that number was 15%. And I think it really goes to the fact that there's higher expectations in the boardroom today. And they really say that board leadership is needed to really affect change in the boardroom. The second statistic that I would mention is the board's important role to oversee the company's strategy. Yet in our survey results, 60% of directors say they don't strongly challenge management's assumptions when it comes to strategy. And that is something that I hope we see a little bit of improvement on. And the third and final one I'd probably mention is social issues. And this has been a huge topic this past year. And right now I think there's a little bit of a disconnect between what's happening in the boardroom and what we're seeing from investors, where probably about half of investors, maybe 40%, don't believe that some of these social issues are impacting company strategy, where investors are asking you to align some of these social issues with the company strategy. So a little bit of disconnect there. I think it'll be a bit of a journey, and I would imagine that some point that that trend line will continue to close a bit.